Good evening, everyone, and welcome to the inaugural Duke Sports Business Conference. My name is Miles Fewer. I am the president and co-founder of the conference, along with Brian Edwards and Harrison Yu. We're excited to launch this program tonight, featuring Duke alumnus Jason Robbins as our opening keynote, 4 industry-specific panels, and Alex Rodriguez as our closing keynote.
The event came to fruition when the three of us came together to discuss the idea of hosting a conference to inspire students and to explore the intersection of sports and business. We hope that this inaugural program serves as the gateway for all of you to continue advancing your passion for sports and explore the various career paths across the industry.
We'd now like to introduce the MC for the night, Caitlin Ray. She's a former tennis athlete and graduate from UCLA, and now a third-year law student from right here at Duke. Take it away, Caitlin.
Thanks, Brian. I want to second everything they said. We are so thrilled to have all of you with us for the inaugural Duke Sports Business Conference. We have a phenomenal group of panelists and alumni who have generously offered their time tonight, and we're so grateful for their generosity. Without further ado, I'd like to introduce the moderator for our opening keynote, Devin Johnson. Devin is a 2004 graduate of the Duke Fuqua School of Business and current COO of the SpringHill Company. It's also my pleasure to introduce our keynote speaker tonight, Jason Robbins, a 2003 graduate of Duke's Trinity College and CEO and co-founder of DraftKings. Jason, we truly appreciate you joining us. Devin, the floor is yours.
Hey, I think we're all set up. What's up, Jason? How you doing?
I'm good. How are you?
I'm good. Good. Great to see you again, man. I think the last time I saw you, we were in person. People were in offices. It was a whole thing.
I know.
Feels like ages ago.
It does. Feels like a long time ago.
So this is my first time doing the moderating thing, so I'm going to need you to be gentle with me. And I think what I'd love to do is kind of just like take everybody on a journey. And we're going to start with your Duke experience. Love to know why you showed up at Duke, what you did at Duke, and who was on the basketball team when you were here.
Well, Duke was a school that I grew up, from a sports perspective, rooting for because my grandfather went there. I had, an uncle that went there, a few cousins that went there. So I was exposed. They were all huge Duke fans early on, to Duke sports, and I grew up rooting for Duke. So that was a big reason. I loved, obviously great academic school, but many really great academic schools don't have the quality of sports. And I was a huge sports fan growing up. So being able to go to a school that was great, both on the academics and had like a really cool sports program, I think was a huge draw for me. And I actually got very lucky when I was at Duke. It was like, all-time great team. So I was there from 1999 through 2003, and we had Shane Battier, Jay Williams, Carlos Boozer, Nate James, Mike Dunleavy. It was quite a team. Chris Duhon was there my senior year, or he was there my sophomore through senior year. JJ Redick was there my senior year. So we had a pretty strong team the whole way through, and I even got a national championship in 2001.
Wow. Yeah, you got the gold standard experience. You got quality academics and a great and got a championship. You got a ship through, while you're there. I wish I could have said that at my time at Michigan, but tell me about kind of the decision. You were a math major, is that correct?
I was econ and computer science dual major, but I had a math minor. So I basically did econ and computer science. Needed to take like I think 1 or 2 more math classes to get the math minor, and I always liked math, so I said sure.
Okay, that makes sense. And then when you left school, you went off and you had a couple jobs. Talk to me about those jobs. What were you doing, and how did you choose those jobs?
So when I started school, it was in the height of the tech bubble. It was late 90s. I remember going to my first career fair, and there were like all these tech companies that raised a bunch of money, and I immediately was like drawn to that. I just loved it. And then a year or two later, they were all gone. It was all banks and consulting firms, and because the tech bubble had burst. For those who may be younger, there was a big bubble in the early internet days, and it, basically came crashing down in 2000 and 2001. So it was really just like a change. And I kind of, said, okay, well, not in a great economy. When I was I got my junior year internship. I actually studied abroad in Australia, which was one of the coolest experiences I've ever had. And then when I came back and was looking for an internship, it was all banks and consulting firms. And I just basically, tried to get a job. And I was very lucky. I got an internship at Capital One, which ended up being an incredible experience. It's a really great company. And so I went to work there after school. They offered me a job, but I kind of didn't know any better. So I told them, listen, I really didn't want to be at a big company. I wanted to be at a tech startup, HR team that, and probably stupid of me because I'm literally telling them like, I don't want to be at your company when I don't have any other, but to their credit, they had a great HR team, and they said, well, we can't offer you, a tech startup per se, but we just bought this company up in Boston. It's, it's a startup, and we're basically going to run it that way. It's just, right now startups aren't getting funded by venture capital, but this one's funded by Capital One. So you're going to have the experience that you wanted working for a small company, but the comfort and security of a big company that's established backing it at a time when that's not, that common among startups. So sure enough, I went there. It was a great experience. I learned a ton. Capital One's a great company, got great training, met a lot of really cool people, really smart people. One of them, Matt Kalish, eventually became one of my co-founders. And then I started to kind of, two things started to happen. One, I started to get the entrepreneurial bug again and the, tech startup bug, but also my timing was always great. As you can see, this was in late 2007, early 2008. And being at Capital One, we saw data. Nobody knew how bad it was going to get, but we saw, delinquency rates spiking on the credit side and things like that. And it just looked like the economy was kind of not going to be in the greatest place. And then, the whole mortgage crisis happened, and I had just left, but I decided at this point not to go do a startup again because I was a little, I knew the financial markets had a chance of tightening up. And so, I said to myself, well, maybe I should take one more stop, and this time I'll go to a company that's more of a tech company. So I went to a company, it was called at the time Vistaprint. Now they bought a bunch of companies and called Simpress, but it was, what attracted me to it is it was similar culturally to Capital One. The co-founder of Capital One was an advisor to the CEO, very analytic, very data-driven company, but it was a real tech company. It was an online company, and they had great engineers and all that. So I went there. I recruited Matt over. Actually, one of the guys that now also works with us, Greg at DraftKings, he was there already, and he was the one who kind of convinced me, like, you should take a look at this company. I think you'll like it. And then, Matt and I ended up there. About 5-6 months after I got there, recruited Matt, and we met our third co-founder, Paul. Paul was working at Vistaprint, and I didn't really know him that well, but he had this reputation that he was like getting promoted every 6 months, just as on this like air.
One of those guys.
And one of those guys, and he literally leaves in the middle of it to go to some startup. I'm like, wow, this guy must really want to be at a startup. If I ever get the chance to see him again, I'm gonna try to talk to him about doing something together. And that startup ended up getting sold, and he came back to Vistaprint. So this time I tracked him down, and I started to talk to him about ideas, and we became friends. And Matt, Paul, and I would just, sort of throw ideas out all the time. We probably, 50, 60 different things, and nothing stuck. Nothing was like, that's the thing, until finally one night, Matt, we were just finishing up work. It was like, 7:30 at night. And he's like, hey, let's go out for a beer. And I said, okay. So we went out and grabbed a beer, and he said, I think I got the idea. And he told me the initial idea for DraftKings Daily Fantasy Sports. And pretty much within like 5 minutes of hearing it, I was like, that's it. That's the one. We've been, looking for the thing. I just had
one you've been waiting for.
I had the bug, but you got to have a good idea. You can't, go, if you don't in the idea, if you don't have conviction, then it's hard to do the things that you're going to need to do to be successful. So that was it. And I said, listen, let's bring Paul in. He said, sure. So we went, and next day we talked to Paul, and then from there we just went to work.
Did you always know that you were going to be an entrepreneur? Because I hear kind of you were looking for a tech startup, Do you have it in your family? Like, what was the drive that was kind of pushing you down this path?
Well, I don't
Or
really
was
have
it the time? Because I know a lot of people at that time, everybody wanted to kind of be in startup life.
It was so in high school, like when I first started high school, I thought I was going to be a lawyer. And then I really quickly realized that I couldn't possibly sit and do the amount of reading that I was going to have to do and the level of detail I was going to have to do to be a lawyer. And I got really interested in business. So I kind of had this idea I wanted to be in business. And then when the internet boom started happening, I was like an early adopter of a lot of that stuff. And I started teaching myself to write code when I was like 14 years old. And I just like was into it. So I kind of then realized I wanted to be in the tech startup world. The most important thing about me majoring in computer science along with economics in college is I learned that I was much better as I got more advanced on the economics side than computer science. The early coding classes I took, I was decent at, but as it got into like, machine learning and more advanced stuff, I just realized I didn't want to be a hands-on keyboard engineer for my career. So after college, I never wrote another line of code, but I knew enough about it and I knew enough about the internet that I felt like I could, be on the innovative side of things. But it took me, after graduating, it took me it's like, it's like almost a decade later before I actually started DraftKings.
Yeah, and was there any key learnings from those couple of years, those couple jobs, and that 10 years of grinding in someone else's company that you brought to DraftKings?
Absolutely. I don't think I think we would have failed, or I would have failed if I had tried to do it out of college. Didn't know anything. Like as much as I learned in college about, what I liked and what I was good at, I needed real world experience. And I got lucky. I went to two great companies where I learned a lot and I got great training. And then most importantly, the network. I had a lot of great people I knew at Duke. And some of them now are involved, but the initial people that we brought on, my two co-founders I met through work. Probably out of the first 30 people we hired, 25 of them were people that I had met through working at Capital One and Vistaprint. So had I not had those people and had I not learned those things, I think for sure I wouldn't have been able to succeed.
Got it. Okay, so let's talk about DraftKings. Now you're an entrepreneur, you're out there, and you're betting on yourself. Tell me about those first couple of years. Was it fat and greasy? Was the money just rolling in? Tell me, how did those first couple of years go?
But that's never how it goes in the beginning. I mean, really like in the very beginning, I was still working full time. So we would go after, we probably work at Vistaprint till about 7:00 at night. And then we go over to Paul's house and, order some pizza.
Oh, wait, so I missed that. So there was a transition. There wasn't a clean break.
No.
You did okay, yeah, let's talk about that. So yeah, how did that work?
So, I mean, we would go over after, work every night and we'd work through till like, 12, 1 a.m. And then on Saturday, I'd wake up around like 6, 7 a.m. and go over to his house. He had a house in Watertown, Massachusetts, and we set up in his spare bedroom. It was completely empty except for some desks, whiteboards, and laptops. That was it. And we were just trying to get anybody we could to help. So we were recruiting, going to startup conferences, trying to recruit developers, other things, and couldn't really get many people. We had tried for a long time to get a CTO, and we just couldn't. And one day, when we had a frustrating, experience where somebody said no to us, Paul just goes, "I bet I can figure out how to build it." I said, "All right, let's do it." So Paul himself. And then once we got a little ways along, we built a prototype that we were able to take and raise some venture capital money on. And then I left. And that was very atypical. Most people leave and then, do it for a little while and then raise some money. But I didn't have any money. So I couldn't afford to do that. I would have been, back on the job market 3 months later if I had tried to do that. And it was tough because, I'd go to VCs and pitch them and they would say to me, "Well, if you don't believe in your idea enough to even quit your job, then why should I give you money?" I was like, I will quit my job if you give me money. I literally don't have, the ability to pay for living. And but eventually we were able to raise some money. A guy named Ryan Moore at Accomplice Ventures in Boston invested. Peter Blacklow at Boston Seed came in. And then as soon as we had the first couple people in, then it became a lot easier. We got a lot of others to follow. So we took the first check was $250,000. We ended up, 2 months later closing out a $1.4 million round. Then we started hiring up. But in the beginning, you're doing everything. I mean, I was, doing everything from looking for office space to answering customer service emails to, and setting up our marketing campaigns on Facebook. I mean, it was literally just everybody pitching in and doing everything. And then as you start to get a little farther along, there's more people that can help with those things. But in the beginning, it was all that. And then the other thing I was doing pretty much from day one, and feel like, even now I haven't gotten much of a break, is pretty much like every 6 to 8 months raised capital. We just raised $1.1 billion about 2 weeks ago. And that was a little bit bigger than what we were raising back in the early days. But it hasn't slowed down. We were in a very competitive space. We needed capital to compete and to be able to, to build the product fast enough, to market, to acquire, customers. And so I was just, we were very good, the initial team, at dividing and conquering. Everybody just kind of fell into what they were supposed to be doing. And there wasn't a whole lot of like overlap. Everybody just really divided and conquered very well. So I focused on the fundraising almost entirely by myself, usually towards the end. VC conversation, they'd want to meet the team, so I'd have to bring in the team, but I tried to shield them from that. I tried to, because it was so time consuming. When you're doing a fundraise, I mean, it literally can take up 100% or close to time. So I tried as much as I could to just put it all on myself and shield my team so they could actually get the work done. And that's sort of how we just naturally fell into the roles we were in.
Yeah. How many? So when you look at from where you guys were in that house with the whiteboards to where you are now, how different is the business model based on what you thought you were going to do, based on what you're doing right now?
At a high level, it's actually exactly the same. When we sat down initially, we said, we're going to start off building the fantasy sports product. And then, we're going to expand into other forms of gaming as hopefully they become legal, because I have been a poker player. One of the things I learned at Duke is I got into poker a lot. And this was also during the initial online poker boom. So I was playing on all the online poker sites and they all got shut down. But
that's not in the campus brochures, I don't think, is it?
It should be. There's some good poker games that we played in the dorm rooms, but I had this notion that like eventually, because I knew it was happening in Europe and other parts of the world, that this stuff was all going to come to the US. So we said, all right, we'll do the fantasy sports thing, and then eventually, as other things get legalized, we'll move into more forms of gaming. Ironically, we actually thought sports betting was going to be last, because there was this federal block that it actually ended up taking in 2018, the Supreme Court overturning a federal law to open it up. So who would have guessed that happened? And I guess what I'd say, Devin, is at a high level was pretty much what we thought. Every single detail that happened beyond that was totally different than what we thought. The path was completely different. I mean, never did I expect to be doing lobbying campaigns and all the different things that happened along the way. But at a very high level, if you take like the biggest picture view, we pretty much thought it would happen the way it happened. And I think that's sort of something that is remarkable to me, that we didn't have to pivot too much. We had to pivot in terms of the things that we were doing day to day and the path. But it wasn't one of these startups where you start with one idea and then you figure something else out and you pivot, which happens so often. It was the core idea was baked from day one.
Yeah. Tell me, what is a SPAC and what does it mean to you?
Well, SPAX, Special Purpose Acquisition Company, what it is a company that goes public with nothing but money. So a sponsor says, I'm going to go raise a bunch of money. They call them the sponsor, her the sponsor. I'm going to go raise a bunch of money, and I'm going to use that money to invest in or buy a company, special purpose acquisition company. And the sponsor is somebody who, probably has had some prior success. So investors say, well, if that person's going to go, find a company and buy it, I'm going to back them. And they also have a special right where if they don't like the company that gets bought, they can do what's called redeeming. They can get their money back at the same price they put in. And they get to keep some warrants, which are basically options that they got awarded along with. So people, if they like the sponsor, will just say, sure, I'll invest this money. In worst case, if I don't like the deal you do, I'll take my money back and I'll keep the warrants. When I did my SPAC, which was, right around this time last year, it's actually in late April when we closed, but when we first decided to do it, it was in the late summer, early fall of 2019. Everybody thought SPACs were like the stupidest thing for a company to do, that only bad companies did SPACs. The only reason I knew about SPACs, there was this guy named Harry Sloan. And in 2015, late 2015, I met him, which of course was through me fundraising. And I said, I pitched him, and he said, yeah, I'm not really doing angel investing, but I have this SPAC. Is there anything that you think could be, an interesting use for it that you've been trying to do? Like, what's the biggest thing you've been trying to do? And I told him at the time, this is in late 2015, that what the really hard thing I've been trying to do was to get our chief competitor, FanDuel, to agree to merge. And I've been trying to do this for a year, and I just couldn't get through. Like, the CEO didn't really like the idea, and I just couldn't get traction there. And he said, well, what about if I go and I make an offer to both companies to take my SPAC and merge you together? And I said, you can do that? And he said, yeah, the nice thing about a SPAC is it's an existing company, so you can merge other companies into it. I said, okay, wow. So he did that. And that sure enough worked. We ended up engaging, we did a deal, we signed a deal. Unfortunately, it got blocked by the FTC. Eventually I learned what a SPAC was through that process, and I kept in touch with Harry, and I didn't know if we'd ever do anything together. But fast forward, 2019, I had identified this company called SB Tech that we wanted to buy. We had jumped into the sports betting industry a year earlier, and we didn't have time to build our own tech platform. We had to outsource one through a company called Canby, who's been a good partner, but we're a company that wants to own all of our own technology. It's just very core to our DNA to be able to innovate and things like that. So I had found this platform called SB Tech, company called SB Tech, that I wanted to buy. And I had also decided that the space was heating up, it was getting very competitive, and I needed to go public in order to have sources of capital available that we'd need to compete and grow. So, I said, okay, maybe I can do those two things separately. I can go raise some private equity or raise some debt, buy SB Tech, and then go public. But if I do that, the earliest I'm getting public is late 2020, probably more likely early 2021. And that might be a good idea, but at the time, and of course, I didn't know COVID was coming or anything like that, but we had been on a 10-year bull run in the stock market. I was a little nervous there was going to be a pullback, and that we were going to end up our timing wasn't going to be right. So it's I really don't want to do two transactions. And the thought occurred to me, this is the same thing that we had talked about 5 years ago, merging multiple companies into a SPAC. So I went and called up Harry. And I said, I got this idea, and he loved it. So we went out and we did a roadshow, raised a PIPE, which is, a private round that goes into a company that's ultimately public. And a lot of SPACs do PIPEs because it's a way to validate the price. One of the things, I didn't realize this at the time, I just thought this is a cool way to merge two companies into a third. But what I realized through the process is the other value of a SPAC is that you can actually go and put out forward-looking projections. You can't do that in an IPO. You can price discovery. You can have price validated by having a PIPE with good sponsors. So we went out. We had Capital Group, who's still one of our largest shareholders, participate and lead the PIPE. Wellington, who's still one of our largest shareholders, they had been a shareholder as a private company. They did the PIPE as well. Franklin Templeton. So we had some good names come in. And that helped us get the whole thing closed at a time when people were still very skeptical of SPACs and thought good companies wouldn't do SPACs. And between having Harry and, we had Goldman Sachs involved, they were, very reputable bank, and having these quality names in the pipe, we got it done. Almost didn't get done because right towards
That's crazy.
COVID hit, but we ended up getting it done. And then all of a sudden now there's like, you can't, throw a rock and you hit someone starting a SPAC.
They're everywhere, man. They're everywhere. So they're telling us we have 2 minutes left. So I'm going to ask you kind of the super question, and it's going to be a combination of a lot of questions, but I'm going to let you just answer it however you want to answer it. So tell us about the future. So tell us what it looks like from a DraftKings perspective. I'm really curious. You signed some athletes, former athletes, what that looks like, cryptocurrency. Tell us what the future looks like. What are some trends that we need to keep our eye on?
Well, I think that, you mentioned crypto, the blockchain is going to disrupt a lot of areas. I think, this whole NFT craze, it's probably a little bit of a bubble, but I think it's real and it's here to stay. Big fan of crypto and NFTs. On the athlete side and the, sort of media side, I think live media, sports media is ripe for disruption. It hasn't been disrupted to the degree that, on-demand media and non-live, Netflix, Disney Plus, those sorts of things. I think athletes are going to start to own their own brands, own their own stories. I know that's big in your business. So I think that platforms like Uninterrupted are going to give them a canvas that they never had before to tell their stories, and they're going to be less reliant on traditional media companies to do it. And I think that's a big trend that's happening. Those are some of the things I think that really matter outside of us. And then, more on our end, I think gaming and interacting with the content is here to stay. And what we do is just allows people to interact with the content. It's no different than people sending a social media post out or texting with their friends while they're watching something. Yeah. Gone are the days where people want to sit and passively consume content. They want a more interactive experience. I think that's a lot of what we're trying to bring.
Okay, cool. Well, it sounds like we ran out of time, but I really appreciate you joining me in my new endeavor here of being a moderator. I'm going to see if I can take Oprah's job.
You're pretty good, man. You should watch out.
I had a great time. I hope you did too. And I think I'm turning it over to the team at Duke. You tell us what we got to do next.
Thanks, Devin. And thank you, Jason. We could not have asked for a better way to kick us off tonight. Thank you for sharing DraftKings' story. And I know if we have some entrepreneurs in the room who are searching for the idea, I know you inspired a lot of people tonight. So thank you. We appreciate you. And Devin, you were a total veteran. So great job moderating. Thank you both.
Thank you.
Thank you.